What if I told you the difference between staying broke and building wealth often comes down to just a few simple investment choices? Most beginners think investing is complicated or reserved for the rich. The truth is, the earlier you start, the faster your money grows. Before you even buy your first stock or crypto, you need a foundation. That means building an emergency fund and clearing high-interest debt. Why? Because no investment can outgrow debt that eats 20% of your money every month. Once your base is set, the safest first step is index funds. Instead of gambling on a single stock, you own tiny pieces of hundreds of companies. This spreads risk and ensures you grow steadily as the economy grows. Here's a secret most beginners ignore: compounding. When you reinvest your returns, your money begins to earn money on itself. Over time, that snowball effect can turn small investments into massive wealth. Risk management is where beginners often fail. Never put all your money in one basket. Mix safe options like bonds with riskier assets like stocks. That balance protects you during downturns while letting you grow. Now, let's bust a myth. Timing the market is nearly impossible. Even the best experts get it wrong. Instead, focus on time in the market. Consistency beats lucky guesses every single time. Imagine this: investing just $200 a month into index funds with an average 8% return could grow into nearly $600,000 in 30 years. That's the power of patience and consistency. So here's your takeaway. Start small, stay consistent, diversify, and let compounding work its magic. Wealth is not built overnight. It's built every single month you stick to the plan. The question is, will you start today or wait until it's too late? Feel free to share your thoughts or questions in the comments section below. Like, share, and subscribe for more awesome videos like this.